Yeah, that's right. Hello, everyone. We're going to be talking about the earnings reports to watch for the week of November 9th, 2020. Crazy week. We'll see how things go. Obviously, we're finally supposedly getting some true election winner here. So I think that's probably going to have a bigger impact on the market than, say, these earnings. But there's definitely some key ones to look at this week that I'll get into for you. And we'll see how they're doing. So we'll just go ahead and start it with Monday. Before open, you see Plug Power. It's definitely a stock that I used to hold for sure, and dropped this year as well after a pretty massive run up for a very good gain. I still would like to mention with this company, you need to think about the fact that first off, they set their goal of $1 billion annualized revenue by 2025, and they're well on pace to hit that goal. So this earnings is going to be a big part of that. I think if you talk about the future and what this company can do as far as hydrogen, I think it's only going to become a more really prevalent factor as far as use. So if we talk about renewable energy, especially with supposedly. I mean, we'll see what happens. We're going to be in a legal battle for a while, but I don't think it's going to change that Joe Biden probably has won. And I do think there will be some potential moves for probably some climate agreements, stuff like, pushing electric vehicles more. And with that, I mean, hydrogen plays a part. I mean, as far as renewable energy, I think it's undoubtable that renewable energy will be put on the table a little bit, and Plug Power sees the benefit from that. So, I mean, I think with this, they definitely will hit their goals as far as that's concerned. So, as far as this earnings report, don't know for sure, but I do think it still is a company to look at. Again, I sold it just because I was up 700%, and I was like, hey, that's fine with me. So, just one to look at still, very important. You have Workhorse after them, Canopy Growth, which is the opposite of Workhorse, really, because the thing about weed, and making you a little bit lazy. No. So, yeah, I've already went into this. I don't like any of these Mary Jane companies at all. Really don't. I think these stocks, there's no real winner in this. In that field as far as these. There's too many companies battling at it right now. And I don't know if you get lucky and predict the winner, good for you. I think there'll be multiple people succeeding, and you see revenue growth still, but I just don't like the potential for them long term. It's just not really a field I want to get invested in. After them, we have McDonald's. If you look, there's been some pretty rough earnings as far as restaurants and even fast food as is. Still, you're not seeing quite the demand you saw before. And I think a lot of it, too, is because they've lost the sit-in business entirely. And you wouldn't think that'd be much of an impact because how much they do the drive-through. But honestly, some people really do prefer to sit in instead of doing drive-through. And they've lost business through that. So you do need to mention that. That also creates long lines at the drive-through because people don't go in anymore. And with that backup, it turns people away. So, I don't know. McDonald's is going to be probably on a low single-digit decline for probably at least 3 more quarters, in my opinion, as long as they have their dine-in closed, which 3, obviously including this, and then next quarter and the one following that. So I'm including this quarter they're reporting as one of those 3. So just anticipate a little bit of, single-digit revenue decline. Nothing exciting. You have Aurora, another one of these Mary Jane marijuana companies. Not a huge fan, so nothing to really talk about there. You have Simon Properties, the largest mall owner out there, so pretty interesting when you talk about the current environment as far as people visiting malls. I think there's a chance with newly elected president. Potentially, we'll see again. This won't be until January regardless, as far as inauguration is concerned, if it does come to that. Now, it likely will, but just throwing that one out there. malls, again, we may see a shutdown of stuff like malls. We may see a shutdown of non-essentials. I think it's possible with rising cases, but I don't know what it will look like necessarily in January after inauguration date. So that is something to mention. And again, it is a governor basis, so it depends on the governor of the state really what they're going to do. So, yeah, interesting to look at. You have Cars. It's a pretty good animated movie, I can't lie. Not my favorite stock, though. U.S. Auto Parts. New Age Beverages, baby. Drink up. Definitely a stock I hold that's been up pretty big. I know them, and they're probably going to disappoint this earnings. But I anticipate probably a revenue increase of over 50%. But I have a bad feeling their EPS line is going to be pretty rough. I can't lie to you. So I don't know. This feels like this stock just doesn't want to go up too much, even though it's at good levels right now. I'm pretty happy with it. I'm finally over my cost basis, and I think I'm going to be set for a good ride over the next few years, in my opinion. So definitely a stock I'll be looking at. And you also have Tegna. Tegna. I don't know. That just sounds weird. After close, you got Beyond Meat. Really one of the up-and-coming, successful companies. Interesting stuff with them. Revenue acceleration's been pretty big, and it's a lot of it due to big partnerships they've been able to have. Again, I've mentioned this before. I do think once decent competitors come in the market, they're going to slow down quite a bit. But from what I've told, I've never actually tried their products, believe it or not, because, I eat meat. But I've been told it's relatively authentic, not too bad as long as you are not just eating it by itself. It's not necessarily as good, but if you put it in the context of, let's say, their Beyond Burger, if you cover it with some good old cheese, a little bit of ketchup, you know what I'm saying? Maybe a little bit of maybe you're feeling spicy, put a little lettuce on there, you know what I'm saying? But yeah, if you smother it with stuff, you don't necessarily really notice the difference. It's pretty authentic as far as texture is the main thing. So yeah, one to look at again, just because we talk about really the growth of sustainable food, and this would be on there technically, as we try to somewhat reduce livestock, which I don't necessarily know if I'm a huge fan of, but hey, it's the way we're going. Novavax, Tilray, another of those weed companies. Yeah, nothing too crazy to say about it. You have Nikola, the biggest fraud in the nation. I don't want to even look at these earnings because they don't make money, so it's really just a waste. I don't know why it's on this list. It's garbage company that tells nothing but lies. You know my feelings now. That's all I'm saying. There's Inovio, Nautilus, Ring Central, EXP Realtors, Norwegian Cruise Lines. Gonna expect some horrific numbers from them. Really horrific. You're talking about dirt cheap tickets as is. Not many people taking them. Just seems. I mean, they're wasting money hand over fist right now. I can guarantee you that. It's gonna be an ugly loss. It's gonna be an ugly EPS line for sure. Tuesday, there's Jumia, D.R. Horton, Advanced Auto Parts, Cybertech, BioNTech, Main Celestial, I don't know, CHF Solutions, Corsair, Corbis, and Excella. Now, after close, you have Rocket Companies. Datadog is one definitely you want to look at. I do think Datadog is a very interesting company, really on the forefront of technology right now. So they're at a very good spot as far as what this company's doing for the future. They're well poised for success. These earnings reports are typically pretty good for Datadog. They've been beating pretty consistently, so definitely should look at it. After them is Lyft, and I talked about Uber earnings last week. I'm just going to tell you right now, these are going to be horrific numbers. So Uber at least had the advantage of getting carried by their delivery segment. Now Lyft doesn't quite have that luxury, being stuck, vast majority to ride sharing. It's a business that for Uber fell massively. Ride sharing business fell 57% for Uber this quarter, and Lyft is going to post similar numbers. So you need to think about that, and I think this stock, it's not a good one for right now. It just isn't. It's an ugly position for this company, and it will be for the next probably at least half a year. So yeah, that not one I'd consider touching with a 10-foot pole. Tencent, kind of in a heated battle right now with Apple as far as their Fortnite is concerned. We like Fortnite. Gevo. You've got Grocery Outlet, Brooks, eGain, FICO. They tell me my credit score, it's pretty okay. And Rackspace Technology. Wednesday before open, a little Chinese action here. Douchu. I don't know, Douchu.com. I think that's how you pronounce that. Lemonade. Lemonade. Yep, that's how it is. Huya.com. Lincoln. Expel. Mastercraft Boat Holdings. Not sure if a lot of people are buying boats nowadays. I feel like I don't see more boats than usual, but maybe more leisure time people are. But again, it's going into winter, so maybe not. Air Products, Repros, maybe. It's got a male and a female symbol on there. I'm very curious as to what that is. Not a company I'm familiar with. S&W and Kamada. After close, you see Grow Generation. Purple after them. I don't know what to think about Purple, obviously. I know I've seen a commercial. They're spending a lot more on ads right now than they typically do. I think they're well poised because really the lack of ability to buy mattresses in person right now, it's pretty rough for a lot of people as far as in-stocks are concerned, and really just stores being open. So I do think Purple could benefit from really the online phenomenon as far as mattress buying is concerned. They also sell seat cushions, which could be a big deal for work at home offices. Everyone needs a nice little seat cushion for their office chair, unless you just buy a really good office chair. But still, yeah. After them, Revolve, which is it's a clothing company, but this is one of the few that is very well poised for the technological aspect of e-commerce. So I do think Revolve has a big benefit as far as that's concerned, and their main demographic is really younger women. It's going to be young adult females. So again, their online segment works very well. I do think it would be nice if they expanded a little bit as far as that main demo as far as the clothing they push. It could be big for them. Right now they're kind of focused on one main segment. I think they could do a lot better. Still an interesting company though. And Vroom, Spartan Nash. I prefer Steve Nash. He's a better ball player for sure. Go Health, Super League, Atmos Energy, Hillenbrand, and Cobat Microelectronics. Thursday before open, you see Wix.com, kind of on the coattails, let's say, of a Wayfair and an Etsy. Wix probably sees a good benefit this quarter with the online shopping craze. Celsius, there's another Chinese company right there with a little heart symbol. I like it. Can't read kanji though. I'm sorry. Can't do it. Energizer. This is not necessarily the quarter for batteries, but next quarter is like the big quarter for a company like Energizer. Fourth quarter is always massive for batteries, but you just talk about Christmas, so not a quarter. Quarter 3 is not one I'm super excited about necessarily, but I do think one you look into for next quarter. InMode, Hymax, and Dava. Nice. Schrodinger, I know his cat. It's pretty cool, I guess. Suburban Propane. And then after close, I would like to say that Cisco is reporting. That's right, Cisco. Yeah. Very basic company. Nothing crazy here. Revenue probably is going to decline this quarter, but again, it's not unexpected because they're really losing their systems revenue. I like what the company's doing though still. AMAT, Applied Materials, right after them. Big one in Disney. Now, I do think, again, as we talk about this, EPS line's not going to be a beautiful one. I don't think that goes unexpected. They've had a lot of spend as far as their Disney Plus platform, which is really the big revenue earner for them. But I do think revenue's a beat this quarter. I think it's still going to decline a good 30-40% because they went a whole quarter without really having is very limited capacity at Disney World, so probably a 20 to 30% decline in revenue still. But this is a really important earnings that I will be looking at. I think it's going to be an EPS miss, but I do think a revenue beat is in line for these people. And I just want to get really more updates on Disney Plus subscribers. I'm going to assume the numbers probably closer to 65 million by the end of this quarter, which is crazy because they were expecting really 50 million by 2024, and they've surpassed that already. So pretty big stuff. Then you see Blink Charging, another stock I used to own. It'll become a lot more relevant. This is a 5 to 10 year stock, and I feel bad for dropping it so early, but I did sell for an 800% profit. Not going to be upset about that. But this becomes more relevant as more charging stations exist when we get more electric vehicles prevalent. So that's one thing to consider. You see Farfetch. He's a pretty cool Pokemon. Pretty cool, I guess. Not that cool, though. Palantir, Agile, Audio Eye, Beezer Homes, and JMF. Jamf. Yeah. Friday, you see DraftKings, which I do think DraftKings is probably going to do a pretty decent job. I do think sports betting's been up quite a bit this year. I mean, people are doing a lot of sports betting this year, so DraftKings probably benefits from that. Undoubtedly. Definitely one thing to look at. Spectrum Brands, Meridian Bioscience, Village PLX Pharma, Fang, Biopath Holdings, and Smith. That's what you got for this week. I hope you enjoyed. Take a look at definitely Thursday night. It's going to be a big night for me, baby.